Hi guys, welcome back. Today I'm going to tell you how to boost your credit score to 800 plus. Yes, it is possible, and I'm going to tell you how it's done.
Impossible. Impossible.
So before we go into that, we got to ask yourself, um, why is your credit score important? Because a low credit score costs you money. It costs you money in the form of higher interest rates, whether you're buying real estate, you're buying a car, you're buying a boat, you're buying a business, you're buying a home. Even utility companies ask for bigger deposits when signing up if your credit score is not that great. Even jobs often run credit checks before making a job offer. So low credit score hurts you in a lot of ways.
It costs money.
On the other hand, a good credit score will save you thousands of dollars, make your life a lot easier, more comfortable. You'll save money on home loans, business loans, auto loans. Even credit card companies will offer you tons of cash back for having good credit score. It's very common these days for credit card companies to offer you 1.5, 2% cash back. My personal credit score of 800 plus, you can see on the screen 834 right now. That did not happen overnight. I'll be honest with you. It was a journey of learnings, and I'm going to share all those learnings with you today. So, when we talk about credit score, the first thing that comes to mind is FICO score. FICO score was invented by First Isaac Corporation, hence the name FICO score, and it was a way to measure, put a number to people's financial habits, their payment history, and how responsibly they keep up with their payments, financial payments, and debt payments. And that's how they came up with the score. You can get an 800 plus credit score and it won't even cost you a penny. Yes, it is possible, and I'm going to tell you that right now. There are 5 factors that go into making your credit score. The first one is the payment history. Your payment history makes 35% of your credit score. It's basically on time payments divided by the total number of payments that you have made. So let's say if you had to make 12 payments and you made all of them, or you made all 12 payments, but one of them was late. So that's 11 good payments out of 12. So that's a 91.6% ratio. The credit card companies look at it as not so good. On the other hand, if you had 24 payments to made, you made 23 on time, that's a ratio of 95%, so that's good. The credit card companies looked at as a less riskier of a customer. Another way to deal with that is you have more credit cards, it's easier to keep the better percentage. One thing I've learned over the years is that to stay on track of your payment history is make at least a minimum payment. Sometimes money is tight, you can't make all the full balance payment, so make at least a minimum payment. Set up auto debit with the bank, so that takes care of that. Number 2 is credit utilization. And what is credit utilization? That makes up 30% of your credit score. It basically means that the credit card company has given you, let's say, $1,000 worth of credit, and you use up about $100 of that. So that's 10% of $1,000. So you are within 10% of credit utilization of your credit card. So that's good. So you're staying within 10% of your credit limit. Credit card companies look at that as a very responsible customer who's not leveraging his or her credit too much. On the other hand, if they give you $10,000 credit and you use up almost $6,000 out of it, so that's a 60% credit utilization. Now you're considered a risky customer because you're probably living beyond your means, and you have a higher risk of defaulting on your loan. So again, the best strategy to improve your credit utilization percent is to pay your balance in full each month. You will accrue less interest charges, and you consider lesser risk for the credit card companies. And routinely ask credit card companies to increase your credit limit. So as the credit limit goes up, the amount of credit you have used is a lesser percentage of this higher credit limit. So that in turn helps you as well. The number 3 thing that helps you improve your credit score is the length of credit history. The longer you have held a credit card, the better for you. That makes up 10% of your credit score. So the average length of credit card holding time, let's say for you, is if you have one credit card, you held it for 6 years, so you now have 6 years of credit history. If you get a second credit card, now you have two cards, so now your average credit history length is now 3 years. So the earlier, and based on that example, so the earlier you start, the better you are. Number 4, the mix or number of credit lines. So basically, if you have an assortment of credit lines, like a car loan, a home loan, a business loan, that shows that you're a better manager of your finances. You can keep track of all the posting dates, the statement dates, the deadline dates to make payments. So you're overall less of a risk. You're a better manager of your finances. Then comes the number 5, which is the number of hard inquiries on your credit report. What is a hard inquiry? When an external entity like a departmental store, a bank loan officer, a dealership runs a credit check on you, they're an external entity, they are considered pulling a hard pull on your credit card, and that negatively impacts your credit score, because the more hard pulls you have, the credit card companies look at it as someone, okay, he's maybe having financial difficulties, he's trying to leverage out debt available in the market to make his ends meet. Compare that to a soft pull. A soft pull is when you pull a credit check on your credit score by yourself. So I always advise my clients, my friends, that when you have a loan officer run a credit check on you, ask the loan officer to run a soft pull on your credit, so that does not impact you as negatively as a hard inquiry. The hard inquiries show up on your credit report for 2 years. They negatively impact your credit report for only 1 year. So keep those numbers in mind. Always request a soft pull versus a hard pull whenever possible. One final comment is credit reporting agencies refer to themselves as credit bureaus. Whenever you see say bureau, it sounds like a federal agency, something very serious, someone very big. However, credit reporting agencies are private companies, and just like any private company, any business, they can make mistakes. So I advise you, and it is your legal right, to get one free credit report each year. Now, when you request a credit report online, your rights as a consumer are not protected. They're only protected when you request a credit report in writing. So I'll post their addresses online right now that you can write to. The 3 credit reporting agencies, I believe it's Equifax, TransUnion, and the third one, the name doesn't come to me, but write to them in writing, have them send you credit report in writing, and they will send it to you in writing by mail, and review it, read it. If you see any discrepancies, write back to them, ask them for more evidence, and let them give you the evidence that they have to back up that negative report on your credit report. If they cannot provide you that in time, they have to legally remove it, I believe within 30 days. So with that said, guys, if you like the information you had today, press the like button, subscribe, share, and we'll return with more relevant info for you in the near future. Thank you, and bye-bye.